Hello and welcome to CMS Forex Daily Video Recap. I'm your Fundamental Market Analyst, Nick Nassad. Today is Monday, October 4th, 2010. The euro fell against the dollar today as the cumulative effect of worrisome news concerning the eurozone drained some of its life from its recent highs. The euro faced headwinds after more details on the extent of Ireland's budget deficit surfaced over the weekend. It was reported that Ireland's government must find up to 4.5 billion euros or $6.2 billion in savings in the upcoming December budget. Also pressuring the euro was the announcement by the ECB of new government bond purchases that further solidified some of the negative sentiment. The ECB purchased 1.384 billion euros in bonds last week, over 10 times the volume of the previous week and the highest level of purchases since the last week of June. The purchasing was done to help prop up governments like Ireland and Portugal that might otherwise fall into prolonged slump because of budget cuts. Taking a look at the euro-dollar pair, we can see that over the past few weeks we've had a very impressive rally that was almost due for a correction. We hit the 1.38 level to end last week's trading and to start this week's trading, and as we can see we had a rather sharp decline during the European session, coming down to around the 1.3665 area. Taking a look at that 3-week span again, we see that we've rallied almost 1,000 pips since September 10th when we found support at the 1.2650 area. Taking a look at this pair in a daily time frame, we also see that in the past 4 months we have recovered all the losses and the gains from the height of the sovereign debt crisis, which we had seen during the spring. So currently we actually moved to the 1.38 level, which was the highest we had seen during that spring time. Zooming back to the 1 hour now, we can tell then that the 1.38 level will be an important barrier as we continue the rest of this week, and it will become important as we consolidate heading into Friday's non-farm payroll data. In a quick look at our other major currency pairs, we see a common theme of consolidation. The pound dollar, for example, traded within the range we had established Friday and also the range we've seen throughout the past week. We have support at 1.5725, initial support, as well as initial resistance at 1.5870, and we tested that in today's trading. That was our high from Friday, but we could see that this level acted as resistance in last week as well. Now, the pound was boosted by a strong construction report and also by news that the government would trim more from its deficit by withdrawing child benefits from 1.2 million higher income families. The news should help the UK's credit rating, but will undoubtedly create some tension in the political arena for the UK government. The politics aside, though, we could see, taking a look at the euro-pound pair, that the sterling strength and the euro weakness carried over nicely into this pair, as we could see it sliding rather sharply from its highs to open at around 0.8730, falling down to the 0.8640 level. Today's decline, if we look at a Fibonacci retracement of our most recent upswing, as we can tell it was a 38.2% retracement, so a shallow correction to our rally from last week. Turning to the dollar-yen pair, we jumped it to start this week's trading, but then fell back down to retest our support around 83.15. We can see that that level had held as support during Thursday's and Friday's session last week. Zooming this pair out, we see that we come very close to the area in where the Bank of Japan intervened on September 15th. So that was around the 82.90 level. So we'll see if this level continues to support the pair as traders remain cautious of the Bank of Japan intervening again. If they fail to intervene at this level, then they will lose some credibility in the market, and we could see the yen continuing to strengthen. Also coming up, we have the Bank of Japan concluding its interest rate meeting tonight, and if it offers up more stimulus in the form of some kind of quantitative easing, that could also pressure the yen and see the greenback gain on the pair. Turning to one of our commodity currency pairs, tied to global growth, the Aussie US dollar, we see that it fell a bit today as we had some general risk aversion in today's market, and we also created some resistance at the 0.9750 area, our high from Friday's session. We also have a secondary level of resistance at 0.9730. Here too, if we take a look at the last 3 weeks of trading, or even the last month of trading, we see a very sharp rally in this pair. We've moved over 8% during the month, so a correction may be in order for the pair. Here too, like in the Japanese pair, we are awaiting the interest rate decision from the Reserve Bank of Australia, and expectations are for it to raise interest rates to 4.75% from 4.5%. The company's statement will be very important, however, as traders will want to see if more rate hikes may be on tap, or if the RBA will rest rest after this increase. So even if the RBA does raise rates, but the statement sounds dovish, the pair could decline in its wake. However, if the statement is focused more on the threat of inflation, then the Aussie could continue its rally that we have seen throughout the last month. Taking a look at the US dollar versus the Canadian dollar, we see that we dipped below the 1.02 level in today's trading, which was actually the lowest this pair has been since August 6th, as we broke below some of our support levels from the last few weeks. But pretty quickly we did see the pair move back above the 1.02 level and then consolidate around 1.0230, as we did have some weak stocks in North America, which forced the pair back in favor of the risk haven US dollar. So as I mentioned, we did have some risk aversion during the New York session as a result of US stocks being down. Now, we did actually have some decent fundamental data come out from the US, but stocks are more focused on earnings and other news, other corporate news, and that's what led to the declines. So that's it for our market highlights. Let's now take a look at the fundamental data from the US that I had just mentioned. We saw that the number of contracts to buy previously owned houses rose 4.3% in the month of August, which beat economists' forecasts. The increase in the pending home sales followed a 4.5% gain in July. So that means that housing is bouncing along the bottom, unable to gain much traction, but with little reason to believe that it's going to go any lower. In other words, we are seeing some stabilization. Also, we saw the bookings for non-military capital goods, excluding planes, increased by 5.1%, which is the biggest gain since March, and a very good sign that companies are spending on infrastructure. The headline factory orders reading, in which that sub-gauge was a part of, did dip by 0.5%, but that was led by a pullback in demand for aircraft. However, if we look at orders for machinery, computers, and communications, all of them improved during the August period. Now let's focus on the upcoming fundamental docket. I had mentioned both the Bank of Japan and the Reserve Bank of Australia will conclude their meetings during the upcoming Asian session. Australia will also be rather busy as it posts its services PMI, measure of retail sales, as well as its trade balance during the session. Overnight, Switzerland posts its consumer prices, the UK releases its services PMI, and the Eurozone posts its retail sales. The fundamental docket is very light in the North American session, as we have just one important release, the US ISM Non-Manufacturing Index for the month of September, and that measure of services is expected to increase a bit to 52.1 from August 51.5. And that will wrap up today's video recap. For more news, videos, and analysis, please visit our site, cmsforex.com. I want to thank you for watching and wish you good trading.